Good day, and welcome to the Ashoka Buildcon call to discuss ACL asset sale transaction. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Satish Parekh, Managing Director of Ashoka Buildcon. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us on our conference call. Along with me, I have Mr. Parekh Mehta, our Chief Financial Officer. We are pleased to inform you that despite the numerous challenges posed by COVID-19 induced disruption, we have successfully completed an asset sale transaction of Ashoka Concessions Limited of 5 SPVs. Ashoka Concessions Limited has entered into a share subscription and share purchase agreement with Galaxy Investments Private Limited, an affiliate of funds managed and advised by KKR, for the sale of entire share capital, including repayment of shareholders' loan, for the 5 assets, which include Ashoka Highways Bandara Limited, Ashoka Highways Durg Limited, Ashoka Belgaum Dharwad Highway Limited, Ashoka Sambalpur Bargarh Tollway Limited, and Ashoka Dhankuni Kharagpur Tollway Limited, for an aggregate consideration of rupees 1,337 crores. We anticipate to close the transaction by September 2022, subject to the satisfaction of certain precedent conditions, including approval by respective lenders and the National Highway Authority of India. Of the total proceeds received in this transaction, rupees 1,200 crores will be utilized to facilitate the exit of SBI Macquarie from Ashoka Concessions Limited, allowing SBI Macquarie to exit the company fully. Following this, the company will remain with 1 toll project, that is Jaora-Nayagaon, and 4 annuity projects, which is Hungund-Talikot, Bagewadi-Saundatti, Chennai-ORR, and K-Ship, as well as a portfolio of 10 HAM projects. We continue to make efforts toward the monetization of these assets in due course. We would like to inform you that we are in advanced stages of discussion with potential buyers for Jaora-Nayagaon and Chennai-ORR, and expect to sign the SPA by the end of this current fiscal year. As a strategy, company to focus on building EPC portfolio going forward. The deal is consistent with company strategy, as it will help improve the company's cash flow, contribute to a significant reduction in consolidated debt, and free up managerial bandwidth, allowing the management team to further intensify its focus on becoming an all-round EPC player, with a primary emphasis on road portfolio expansion through EPC and HAM projects. With this, we now open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi Satish sir and Parekh, congratulations on the deal. So my first question is on the deal. So how much of inflow comes to Ashoka Buildcon standalone from this deal?
Didn't gather you. What is how much of?
How much the inflows from this will come to the Ashoka Buildcon standalone entity?
Right. So plain mathematics, as it says, is we are for the 5 assets we receive 1,337 crores. We give an exit to SBI Macquarie of 28 crores. So from this transaction, 1,137 crores is what ABL should receive.
Because the question was that we have been consolidating the stake in different assets ahead of this deal. So is there any dues pending from other shareholders where will we have to give them any consideration for those acquisitions done earlier?
Yeah, so most of it is purchased and only an extent of around 27 odd crores should be paid in due course of time. We are waiting for their permission for the same.
So 137 out of 137 or 27 crores will go towards that.
Yeah.
So now coming to the write-off part, just wanted to understand how much of write-off is expected from this because this has happened below the book value of. So if you can just highlight how much is the total equity investment done against these 5 assets, how much will be the write-off likely we'll book in this quarter, and also from the other income which we have been booking on loans and advances. So how much is the accrued and unpaid other income sitting on these 5 assets? And do we need to include that also in the write-off?
Yeah. So for the total 5 projects, whatever equity and promoter debt which has been given in the form of either initial construction financing or as part of the equity, or construction shortfall debt or revenue shortfall debt, and interest accrued on the same, that would be approximately 2,100 as of date. Which is on the books of ACL as investment in these 5 projects. This will require to be adjusted from this earnings of 1,337 crores. So we will have a net impact of approximately around 800 crores on gross basis at ACL level, and we have already provided for some certain impairment of 245 crores in the past few quarters. So the net impact will be approximately 550 crores.
And what about the other income which we book on the standalone basis, other income on these investments? So is there any hit which will come on it?
No, that is already included in the promoter debt. So it is the total composite amount of debt plus accrued interest on the same.
Okay. Just last question, sir, on Chennai ORR and Jaora. So both are the state projects. So Jaora has seen decline in traffic because of the construction activities going in some of the stretches, which has led to diversion of traffic. And Chennai ORR is already category default rated by India Ratings because the annuities have not been coming on time. So in such a scenario, do you think these 2 assets are monetizable, and will you be able to get a good value for these assets? And have we started receiving annuities for Chennai ORR? If you can just update us on that.
So as we have already stated, Mr. Parekh has stated in his opening remarks, we are quite at an advanced stage for both these assets, Jaora-Nayagaon as well as Chennai ORR, with a potential investor, wherein we are at the stage of SPA. Even the SPAs are getting finalized. So definitely there is a lot of interest. Talking to specific your questions on Jain, it's a model, financial model which throw a valuation number, and in Chennai ORR the rating is D only because there is a delay in annuity received. This can be very well addressed by the potential investor, so that he can decide how to handle the SPV post acquisition. But the interest is substantially there.
Okay, sir. So more questions I'll join with you. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Next question is from the line of Ankita Shah from Elara Capital. Please go ahead.
Yeah, thank you, sir. Sir, what is the total equity invested in the balance 5 operational assets of ACL and the 10 HAM projects?
So on the 5 BOT, that's Jaora-Nayagaon BOT and 3 annuity assets, the total investment is approximately 510 30 crores.
Okay.
And in hand, there is the total investment as of date is 674 crores.
670. And the balance amount to be put in the HAM projects
Is approximately 300 crores.
300 crores. And sir, within this 530 crores, the two projects which are in advanced stages for monetization, Chennai and Jaora-Nayagaon, what would be the amount in for that, those two projects?
Around 350 crores.
Total for both the projects put together?
For both the projects, yeah.
350 crores. Okay. And sir, on the write-off amount that is mentioned, so the entire amount, when will it be booked? 500 crores?
Because the transaction has already been executed and we are in binding documents. The call will be taken and the write-off will be taken in the quarter of December, this December, Q3.
In Q3 itself?
Yeah.
Okay. And sure. And sir, what is the debt in all the 5 assets that are monetized, which will lead to reduction in the consolidated debt?
The total debt as of 30th September approximately was 3,150 crores approximately.
On the 5 assets?
On the 5 assets, yeah.
Okay. Sure. Okay. I'll come back in this. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah. Good evening, sir. Thanks for taking my question. And congrats on the execution of this deal. So, sir, you mentioned that the total equity invested in these 5 projects is around 2,100 crores. That's including all the loans and advances and all the kind of promoter, sub-promoter loan, everything that the SBI Macquarie Group and the Ashoka Buildcon company has invested, right?
Yeah, that is with the investment got from ACL or ABS to these 5 SPVs. There would be some additions again up to 31st March 2022 because valuation is of March 22. Some amount will get added, approximately 100 odd crores, and that's how the deal will conclude.
So that 100 crores will be reduced from that deal value, or will that deal value will also increase by that amount?
No, the deal value will remain same. The cost will increase.
So basically, out of the instead of okay, fair enough. So net we can say that we'll get 1,237 crores instead of 1,337 crores.
Yeah, I mean actually 2,100 will grow to 2,200.
Fair enough. So net will get that amount. So and sir, at this point of time, is there any debt at ACL level, ACL Holdco level?
We have 250 crores of NCD lying, which we had raised 4 months back.
Okay, and that will remain. So ACL as an entity will remain after this transaction?
Yes, sir. Because it will keep on holding the annuity project, Chennai OR, JN, and the 7 HAM projects. 3 are held.
Okay, so right. So now, sir, all the other BOT, annuity, HAM projects, they all will be housed in ACL, in which we will have 100% equity holding.
Right.
Got it, sir. Also, sir, in terms of our standalone numbers, we report almost 200. I mean, last year we reported almost 192 crores of other income, in which around 118 crores every year has been in interest from subsidiary and JVs. So, with these 5 projects going out, can we assume that number will basically reduce to zero with these projects, or there will still be some more some income coming from other SPVs?
So it will substantially reduce. What will remain is approximately around approximately 30 odd crores will remain from income from ACL.
Okay, and that would be from which subsidiary?
Basically Chennai OR.
Okay, so Chennai OR right now is paying interest to the tune of, let's say, around 25 to 30 crores per annum to ABL.
Right.
Okay. And if we are able to sell Chennai OR also by March, then that would also go away.
Right.
Got it, sir. Got it. And sir, going forward, I think in terms of our HAM portfolio and our strategy, are we are we still looking to get into BOT projects? I think recently we had submitted bids for the 3 Ganga Expressway, in fact all the 4 Ganga Expressway packages. So are we still looking to get into BOT projects going forward, or is it going to be largely focused on EPC and HAMs?
See, largely the focus will be on EPC and HAM.
Mm-hmm.
But if there are really good bids around, then BOT is also not a barrier for us.
Got it. And in terms of other segments, will we continue to bid for projects in buildings and railway segments, which we have recently started bidding?
EPC we are going to bid all around. Primary focus will be roads and railways, and then buildings would be there, power would be there.
Got it. Sure, sir. Thank you so much for taking my questions. I'll get back in the queue if I have anything more.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir. Sir, your first question was on this Jaora-Nayagaon in Chennai. I think we are in the process of monetizing these 2 assets as well. But just want to understand why is it, these were not a part of the transaction that we've done with KKR. Is it that, valuation was not as per your expectation, which is why these were kept out of the transaction, or is it as if, because these are state assets, which is where the client was not interested? If you could share your thoughts on these 2, please.
So these 2 transactions, we've already been talking to another investor simultaneously. So they've all been carved out to another investor who's already looking at it seriously, and as I said, they are under a very mature stage of transaction execution. So KKR was interested in BOT projects, so these 5 assets were still on board to be sold. So they took interest in these 5 projects.
Sure. And on Chennai, just to kind of continue with what Parekh was trying to understand, I think last time when we tried to kind of transfer the stake in Chennai over to Ashoka Concessions, the lender was not willing to kind of extend us the approval. So you don't see any such situation, at least this time around. If you get to find a buyer and that lender would be comfortable kind of giving you approval for transfer of the ownership, because last time they refused, if I remember correctly.
No, the lender had refused because they said, please get the permission of the authority, and authority will give the permission post COD, so post PCOD. So because we are expecting COD anytime, once the COD is done, then the transfer permission from TNRDC will be available, and lenders will be more than fine to transfer the stakes from ABL to any third-party investors. And so in case third-party investors are deep-pocketed investors, I'm sure they will be more than happy not to create any hurdle.
Sure. And on the inflows that will be there for Ashoka as a group, I think you said 137 is what will come from this transaction. Would you get to have anything over and above this 137? Essentially, when I look at last year's annual report, I think these SPVs all put together were supposed to kind of pay us almost 140 odd crore rupees towards the O&M work that you would have carried out or major maintenance, or is it 137 or 1337 is also adjusted for the payables which were due towards O&M or major maintenance or capital creditors?
So that is total payable as of 31st March 22. There will be some work still left out, which will be paid by the SPV post 31st March. So we'll execute also then, and we'll be paid also then by the SPV,
Sure.
that is by the new owner.
Okay. Would you be able to confirm the number, sir? How much could that be? Over and above 137 that you're expecting?
No, but then that will not. That will have a cost also. So I don't have a number at all. There are 2 contracts of SPA, with in Ambalpur and Indore, which will be going on. So some part of the portion, approximately 50%, approximately around. I cannot quote numbers, so that will be pending to be paid by the SPV.
Sure. No. I was asking about the number which was due as of 31st March. So when I look at our annual report for all these SPVs, some of these SPVs, for instance, I think Bhandara is supposed to pay us almost around 27 odd crore rupees for the work that you would have carried out in the earlier years. So that number the number that I have with me is around 140. So this 140 would be over and above this 137 crores, or
No,
this
it's inclusive.
this is inclusive. Okay, okay. And how about impairment as standalone? So I mean, the number that you gave us was at ACL, wherein you already provided for a part of your investments to the extent of 250. But when I look at standalone entity, we have not had any impairment as yet. So fair to assume that the impairment that will be there at the standalone entity would be higher than what will be there at ACL?
So the standard
Because how?
ABL you're talking about?
Yeah, ABL I'm talking about. So how I was looking at the number was essentially, so you said 2100 is the investment, 800 would have come from SBI Macquarie. So our investment was 1300, and against the 1300, we are getting only 130, right? So which gives me a number of more than 1000 odd crore rupees. ACL, I understand you already provided a part of the investment, so which is where you won't get to have that large number. But at least for standalone entity, which is how the math would work, or
then there will be Chennai Aurora available. There will be other assets, Jaora available.
Sure, but their investments are separate, right?
Yeah. So all in all, approximately the impact on standalone at AB level would be to between around 600 crores.
This would be after you monetize Chennai and Jaora, right? Net you're talking about.
Before. This is before.
This is even before. Okay. Yeah. And any claims in any of these SPVs that you're supposed to transfer?
No, all these remain with ABL.
Okay. How much would the quantum be? I mean, if there's any quantum that you could share with us? I mean, how much is the number?
Differ at various levels. Okay. So at the right moment only we will be in a position to crystallize what exactly the amount. The amounts could be larger. In these 5 assets would be to the tune of more than 1600-1700 crores. But what will crystallize will take time. Some will crystallize within 3 to 6 months time. Some will take some more time.
Sure. Thank you, and that's it from my side. Congratulations on the transaction.
Thank you. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Yeah. Good evening, sir. 2 questions. Firstly, sir, congratulations on closing the deal. The question is, sir, what was the Jaora Nayagaon revenues and EBITDA for H1 FY22, and how much you hold in Jaora Nayagaon through ACL and through ABL?
In Jaora Nayagaon, through ACL we hold 37.74%, and through our 100% SPVs, we hold 36.26%.
So it's closer to 23%, right?
The 36.26. So 36.26 plus 37.74. Total is almost 74%.
I'm asking this because in the annual report it says 61%. Just trying to confirm that number. Yeah.
51% is more from a control perspective, because ACL is the economic interest of technically 61% by ABL and 39% by Macquarie, and then Macquarie holds 29% directly in Jaora Nayagaon. So that math from a control perspective, 51%, more than 51% is owned by ABL. So that's the reason we consolidate.
The economic interest is 24%. Am I right?
Pardon?
So economic interest is for 74%.
Yeah. Economic and direct interest, 24%.
Understood, sir. Sir, of course, can you just share the revenues, EBITDA and date for Jaora Nayagaon for H1 FY22?
So the revenue was approximately 80 crores, 81 crores in Jaora Nayagaon. EBITDA almost is a tune of around 89%. And the equity, the debt which was there as of 30th September 21 was approximately 208 crores.
Understood, sir. Secondly, sir, given that our first phase of monetization is almost getting over, are we in discussion now to monetize our HAM assets? And when can we expect COD of Kharatunda Barwadda and Vadodara Keam and Belgaum Khanapur?
So on the HAM projects, we have two projects which are already PCOD done, and we do have certain interest in the projects. But we on the way the HAM projects are getting constructed and they will pan out, we believe that there could be another route which is an InvIT sponsored by Ashoka Buildcon itself and hold it. So we are in. Though we have already put it on board for sale, that second alternative is also there to monetize it through an InvIT structure.
Understood. Lastly, sir, is there a scope of O&M in these assets which you've sold to KKR?
Absolutely, understanding for O&M.
Understood, sir. Thank you and all the best. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Vaibhav from CIL Securities. Please go ahead.
Yep. Hi, thanks for taking my question. My question was, what would be the debt on the consolidated level after the sale of these 5 SPVs?
So we have totally consolidated around 6,400 crores,
Yes.
of which debt for these 5 projects is 3,150. So approximately 3,300 would be the consolidated post.
Consolidated.
Yeah.
Post the sale of these 5 SPVs.
Yeah.
Thank you so much.
Yeah.
Thank you.
Yeah. Fine.
Vaibhav, you have any other questions?
No, that's it. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one. The next question is from the line of Devang Modi from Arteco. Please go ahead.
Yes, thanks sir, for taking my questions and congratulations on concluding this deal. So I just wanted to understand that having now, I think this deal has been going on for very long. So how much of management bandwidth and growth appetite does this free up for focusing on the core business? Because I understand this would have taken a lot of management time and bandwidth. So, and how does this deal, is it a very, would you say that it is a game-changing deal for the balance sheet and the growth appetite of the company going ahead?
So definitely the asset monetization is going to help the balance sheet of the company to become more lighter. The debt equity ratio also will improve substantially. Rating also will go up because the commitments on the debt would go down as the debt will be going down. From a management bandwidth value also, whatever time was being invested in monetizing these deals and managing these assets, these would be reduced, and it will help the management to focus more on the EPC business and the new HAM road projects.
And what would be any upsides, if at all, that would be available to us on these deal in terms of any pending claims that we would have rights to or anything like that, if you could quantify the same?
So a couple of advantages are there once the deal happens. So these projects definitely require a cash in the next few years also, and then they start becoming independent on their own. So that requirement of cash will definitely become zero post this deal happening. So that will improve the cash flow management of the company.
Sure. So I was asking
About
about
the claims also. These 5 SPVs, we have claims against NHI, which we are in the process of settlement. So definitely there will be an upside in that.
So if you could, we will have entire right to the claims, or there will be
We
sort
have-
of.
we have- Yeah, we have.
And ACL are actually shared with SBI Macquarie, and what could be the indicative numbers over there?
Nothing has to be shared with anybody.
Okay, so that is basically available to ABL standalone.
ABL and ACL.
Or ACL, either way. But if you once it will become 100%, so as you rightly said,
It's ABL.
And what would be the approximate range in which these claims could amount to?
No, this cannot be estimated at this stage.
Okay, sure, sir. Thanks. That's it from my side.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you. Thank you for the opportunity and congratulations on completing the transaction. So, the first question is that, with a sizable amount of cash that might come in the second part of the transaction, which is the Jaora Naigaon, what is our thought process in terms of what we want to do? I mean, you did say that you will focus on Ham Road, but is there anything else we have in mind which will consume that capital? So essentially, what's our capital allocation philosophy going to be once we are done with both sets of transactions?
I think that we can decide at the time of actually signing the deal. We can disclose about it.
Sure.
Yeah.
Fine. Okay. In terms of the obligation of 1,200 crores to Macquarie, so that remains at 1,200 crore, right? I mean, because our date for consummation is September 22. So will this 1,200 crore increase or it will remain at 1,200 crore?
Hello.
Yeah. Sir, was I audible, sir?
I lost you. I lost you, sir. Can you just go again?
Right, sir. Right. What I was saying, sir, is that this 1,200 crore, the obligation that we have towards Macquarie, so now that remains at 1,200 because the transaction date for consummation we are saying is September 22. So will the interest for 9 months get added to 1,200 or it will remain at 1,200 only?
At present, it remains at 1,200. So the as we had disclosed, it was 1,100 basic amount with a carry of 10% with a capping of 1,200 total. So then it will be capped at 1,200 at present.
Okay, so that's fine. And sir, if I understood correctly, the receivables, etc., that we have from the SPV are a part of this consideration of 1,337, right?
Right.
Okay, fine. Right, sir. And so lastly, this can it be safe to assume that the settlement or the conciliation of the claims will happen alongside the receipt of the NOCs, because typically NHI, while issuing the NOCs, does insist on kind of settling the entire claim process which has been going on. So then, would it be safe to assume that by March or by June, this whole clarity will also come on the claims question? At least in terms of timeline.
Yeah, we believe so.
No timelines can be given for settlement because NHI comes out with various circulars. So it's very uncertain to gauge that settlement will happen and encashment will happen in certain timeline.
Sure. Okay, so that's it from my side. Thank you and all the best. Thank you.
Thank you. The next question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Yeah, good evening, sir. Am I audible?
Yeah.
Yes, sir. Sir, what is the equity outside the loss funding or any support by SBI Macquarie and Ashoka Buildcon and other equity partners in these 5 assets?
So the total equity, including loss funding, like I said, around 2,100 crores as of date.
Yes, sir. I just want just the equity portion without the loss funding and the support.
Approximately, if I'm not mistaken, around 700 crores.
Okay, and of that 700 crores, how much would have been Ashoka Buildcon's proportion?
Very specific, sir. Everything all poured into ACL, and then construction for this 3-4 SPVs was already underway. So it's not fungible. money was put in by Ashoka Buildcon around 1,000 crores. 800 crores was put in by Macquarie, and the total sum was utilized for funding these 5 assets plus the other 2 assets of Jaora-Nayagaon and Chennai.
Sure. Just trying to understand our price to book multiple. That's the only reason why I'm asking. Because of course SBI Macquarie makes 1,200 on the investment they made. So what is the price to book multiple on the exit is higher. So just trying to understand, what exactly is the
So unless we know what exactly is the realization which is possible in the other assets, it is difficult to come at a price to book.
Sure, sir. Probably once the Jaora-Nayagaon Chennai is completed, that will be more clear. I'll also probably get in touch with you offline. So you mentioned that the impairment at the Ashoka Buildcon standalone level would be around 600 crores.
Right.
And that would be given effect in the third quarter's results itself.
Yeah, that's what we discussed earlier. Maybe fine tuning and various audit guidelines would decide what exactly the numbers are. This is a
no, I understand. Got it, sir. Sure, sir. Okay. Thanks for answering my questions and all the best.
Thank you. The next question is a follow-up from the line of Parekh from HDFC Securities. Please go ahead.
And so just on the loss part, so this is a capital loss for us. So how can we get a tax shield? So do you think you can get any tax shield here from the business profits, or how are you going to utilize this?
So this could be utilized for when we are selling gain, Jaora-Nayagaon, Chennai or the HAM projects, definitely. And new assets will come. So there will be a life of 8 years for these losses to be enjoyed.
The second question is on, sir, in the past we had seen one of your competitors selling the portfolio at about approximately 1.7, between 1.7 and 1.8 times price to book. So do you think that for the other 2 assets, at least you can, on the lower side, you can extract that kind of value on 350 crores of equity investments?
It's a valuation game. We will always endeavor to have the max. So I think we'll have to wait and watch.
Okay. Yeah, on the third-party liabilities outside the banking system, so besides the loan which is going, which will reduce, is there any other third-party liability which will sit on our balance sheet as of the closure date, which may require to be paid off? So be third-party debt beyond banks or any last mile commitments towards completion of these 5 projects, residual completion. So anything else which will sit beyond this, which will need to pay off?
No, this is all third-party liabilities, including NHI, deferral loans, are all inclusive of this 1,337 transactions. So they are net of all these liabilities.
Okay. So I think earlier you had, so I know Satish sir is not putting any number to the claims, so but I think you had earlier mentioned about 1,500 crores is the total claim which you have put for NHI. So you don't know how much will get finalized. Is the understanding correct, right? So the final part you are not able to comment, but at least the amount which has been filed with NHI is about 15 to 1,500 crores?
It's a changing number and it is adjudicated at various levels in various times. So you can presume that number maybe, but it is kind of kinetic. It's not static.
Okay. So earlier in the call, Satish sir, you had mentioned that you are open to looking at projects like BOT assets if there's a unique value proposition offered by them. So recently we had seen in the Vande Expressway, none of the EPC players, players who have strong EPC capabilities like you, bidding for these, and they've clearly stayed away. And most of the bidders were really pure play developers. So just wanted to understand your intention for a project size of 6,000 crores and huge equity requirement. Like even if you set aside that 40% grant portion, the equity requirement will run into multiple hundreds of crores. So what was the intent? How would have you funded if you had gone to that project? So just wanted to understand from that point of view the strategic intent on bidding for such a large project.
So for the large projects which we bid. Of course, if you, in the past we have seen generally we have been funding it from our cash flow generated from our EPC business. Presently, as we also observe that more than 50% of our EPC business is cash EPC contracts, where there is cash generated and also cash generated from the development projects EPC contract. So that typically generally is sufficient to fund the equity requirements of these projects. So that's the strategy. In case we take equity.
Parekh, this is more from this specific project of 6,000 where the equity requirement would have run into 1,100 crores standalone basis for one single project. So I just wanted Satish sir's view because he has, I mean, after having such a great experience in selling out BOT assets and incurring such a huge write-off, I mean, bidding for these projects in future. So just wanted to get some clarity on the strategic intent here because this one single project would have entailed about 1,000 crore investment of equity if we had won it. Satish sir can comment on this. Be grateful.
Hello.
Yes, Satish sir, you are there?
I think he dropped off. Yeah, he's there.
Yeah, sorry, I'm there.
Yeah. So my question, Satish sir, was on that you had earlier in the call highlighted that you will keep on evaluating on BOT assets if they offer value. So just wanted your viewpoint on this 6,000 crore Ganga Expressway project. If we had one, we would have required about 1,000 crore of equity investment after 40% grant. So just not having a very great experience in this earlier BOT assets, do you think that still, I mean, we continue to bid for a sizable project wherein none of our EPC peer-to-peer EPC player bidding for this Ganga Expressway, largely it was bid by developers. Just wanted to understand your strategic intent here and committing for such a large project like if we had won 1,000 crore kind of equity investment. So you can just give us some sense there. How do you look at it?
See, every project will have a different character. And I think we understand BOT last 25 years. 96, we are the first player to start with. Okay, we have taken hit because of COVID and other issues the entire industry has taken. But that doesn't mean we don't understand. I think we understand the business as much as everybody in the industry understands. In fact, new players are coming in the sector. So
the question is not about understanding.
Us of understanding of BOT because we ordered values for reasons beyond our control is a completely non-acceptable statement.
No, I'm not contesting that you have bid for wrong project. I'm saying sizable one.
We understand our business very well, sir.
Okay, Okay, sure. So I just meant that this one project of 1,000 crore equity investment, not that.
It's not an issue when we monetizing all our projects. We'll be left with more than that.
Okay, sure. Got it. So that was basically the premise. Just lastly on the growth now, so you said a lot of management bandwidth will get free. So any upgrade on guidance on growth side because we've got sizable order wins in this financial year to date, almost 6,000 crores worth of new projects. We have one order book is at 12,000, more than 12,000 now. So do you think that we can continue to grow on a EPC basis of 15 to 20%? So if you can give some sense there on the growth guidance part and on the margins as well on EBITDA margin.
EBITDA and growth-wise, we are absolutely very confident. The company will do fantastic in coming years.
So at least 15% kind of growth we can do for next 2-3 years on a CAGR basis?
Yes, absolutely. 15 is too low to estimate, but we will do very good numbers in coming year.
And on EBITDA margin, like 11 to 12% is like because now the share of EPC is much higher.
Margins can vary with growth, depending upon the competition and all other factors. But growth definitely will be there. Our net profits will always grow.
Okay.
I don't see any challenge going ahead.
Okay. And we'll be open to take some more subcontracting works like we have recently taken. So we are open to even that opportunity as well.
Absolutely. If they are making sense, if we are making profit out of it, we definitely will go for that.
Sure, sir. That's all from my side. Thank you and all the best, sir.
Thank you. The next question is a follow-up from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yes, sir. Thanks for taking my question. Sir, just two clarifications. One is you mentioned that the equity invested in Jaora-Nayagaon and Chennai is 350 crores. This 350 crores is inclusive of all loans and advances, loss funding, everything?
No. This is equity and loan. So there is loan advance at Chennai level. Loans and EPC outstanding of around 250 odd crores. 369 is the basic equity.
359?
350. Yeah, 350 approximately.
350 crores is the basic equity, and there is another section of 250 crores.
240 crores of debt and EPC outstanding at Chennai level.
Okay, so put together in these two projects, we have almost 600 crores of investment.
Right.
Got it, sir. Got it. And sir, just to get the clarity on the stake part. So at this point of time, Ashoka Buildcon plus Ashoka Concessionaire put together, how much stake do we hold in Jaora now?
74.
70. And the remaining 26% would be held by?
SBI Macquarie directly.
And they are not exiting that through this transaction. They might exit when we sell the project, but not through this transaction.
No, I mean, we'll jointly get together and sell it.
Got it, sir. And sir, in Chennai, what is our total stake?
50.
And the remaining 50% would be held by us?
GVR Infra, Chennai based company.
Okay. Yeah. Okay, and there also we are not looking to consolidate before the sale. Only when the sale happens, very probably both exit.
Yeah, we're working together. How the process may happen as a consolidation, but we are in the process of selling it jointly.
Got it, sir. Got it. Great. Thank you so much. Thanks for taking my questions and wish you all the best.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good evening, sir. So most of the questions has been answered. So one question I want to know, sir, now with this deal, SBI Macquarie has completely exited in the other assets also, right, sir?
Yeah. So whatever things be paid off, so we'll have to wait for the payment to be made. The day they are paid off, they will be acquiring all their instruments, equity instruments or convertible instruments. They will not have any interest in the business.
And sir, with this deal, sir, this amount has been freeze or it is subject to a change if there is a delay from any delay from authorities for giving NOC or any other reason or any other any maintenance or everything is included? How it is, sir?
Yeah, so this is typically the total value. Presuming that all these conditions will come within a period of
9 months. Right?
Yeah.
So this is a final value. Okay, sir. That's what my side, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Harshil Kotari, an individual investor. Please go ahead.
Hello. Yeah, congratulations for the transaction. I would just like to know the total equity investment that was made in this 5 projects that we sold.
Equity cum debt, total promoter debt on this 5 projects was approximately is about 2,100 as of date.
Okay. Including debt as well, right?
Yeah, including promoter debt.
Now, I would just like to know the equity investment that was done in this company by ACL.
That number I don't have offhand.
Okay.
If you want, I can get it out.
Okay, so how should I get that?
1 second. Total equity investment, because all these shareholders loan are inclusive of shortfall funding also, so I don't have a bifurcation as of now.
Okay, that was the only question from me.
If you require, you can always get back to us offline call.
Okay, fine. Not an issue. Thanks a lot.
Thank you. The next question is a follow-up from the line of Mohit from DAM Capital. Please go ahead.
Yeah. Good evening, sir. Thanks for the opportunity. Sir, my first question, is there any plan to retire the Ashoka Concessions Limited debt with the new proceeds of, especially Jaora-Nayagaon and Chennai ORR?
I think so. It will depend on how ACL's HAM portfolio develops, or otherwise, if there is any realization, we'll probably retire the same.
Secondly,
the cost of 9.2, 9.3, probably we'll want to retire depending on how the interest market is. We decide how to. This debt is for almost 3 years. Split that various age from 1.5 years to 3 years time.
Understood. Secondly, sir, when do you expect the COD of the 3 HAM assets where I believe the work will be in advanced stages?
For one of the projects, Veladonda, they have already recommended, I have recommended, so we are awaiting that. For other two projects, we are waiting, and we should get it within 2 to 3 months' time. Belgaum Dharwad and Ankleshwar project. Belgaum Khanapur, sorry, not Dharwad. Belgaum Khanapur.
Lastly, sir, is there any plan to reduce the risk in case we bid for BOT or TOT? Is it possible to tie up with some financial investors and try to reduce our risk? Because I believe in greenfield BOT, especially the risk goes very high, very high.
No, so you see, there are strategies around it. We understand risk. I told you very much because we have experienced this so many years. So we are entering into structured deals.
Structured deals is yeah. Understood, sir. And sir, is there any BOT pipeline which is available for bid in the next 3 months?
BOT pipeline is not available.
Understood, sir. Thank you and all the best. Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for their closing comments. Over to you, sir.
We thank all the participants for having joined this call. We believe that sufficient data points were made available. If there is anything still to be clarified on, we are always available directly or through our IR consultants, Stellar Investor Relations. Thank you, everybody, and Happy New Year to everybody.
Thank you. Ladies and gentlemen, on behalf of Ashoka Buildcon, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.